and welcome to the second webinar in our Leading Edge Insights series brought to you by Liberty Corporate. I'm Alicia Seckham. It's great engaging with all of you today, albeit virtually, and hosting this hybrid format event with some of our guests right here in studio and a few joining us remotely as well. So once again, a very good morning to you wherever you might be. Now, like I said, today's webinar follows the first in a series where we delved into the changing world of work and put particular focus on how current trends are influencing, if not leading, decision-making in the workplace, specifically in the war for talent. Because let's face it, human behaviors are changing, and if businesses can better predict people's decision-making criteria in light of these trends, not only can they tackle any challenges head-on, but they're also better equipped to take advantage of any positive trends in a tangible way. So, if a business is able to find key talent, for example, how does it then use trends in play to reward, engage, and ultimately retain talent within the business? If you missed that one, take note that the session is accessible on Liberty's YouTube channel, so I'd like to encourage you to take a look back at that. But let's get on to today's agenda. Zandile Makoba from Liberty is going to be joining me in studio in just a bit to help set the scene before we're joined by two guests from the world of business. They're going to be sharing some of their journeys with us. Lebo Ramakwela of Libra Landscaping and Facility Management and Andrew Milson from Food Lovers Market as well. And then, to wrap things up and close out the session, we'll be joined by Bram Nadir and Tembi Mavuso from Liberty with their insights on what we can focus on next in our businesses. Before we get into it, just a quick note that the team here with me today are eager to hear from you too. So should you have any questions you'd like them to address, please post those into the comments section via the chat function, and we'll try our best to respond to you as soon as we can post the session today. Let's get going. First up for today's session, I'm pleased to welcome back to our studio Zandile Makoba from Liberty. Nice to have you back with us. Zandile, let's get straight into things here, perhaps with a bit of a recap of what you and your team do at Liberty.
So with research and insights, one of our big focuses is really to bring the outside world in, to really get a sense of how the macroeconomic environment is affecting our businesses, our clients, and hopefully today's insights will just show us a little bit more of that.
And that's exactly what we touched on in the first Leading Edge Insights webinar, right? Because you took us through global economic trends impacting the business landscape, and then the importance of actually valuing human capital within that context by considering the investments made, the true value of experience, the impact on profitability as well, all with an eye on what business owners and managers need to consider as they look to return to the growth path again. Today, we look to the future once again, but let's piece together a bit of an action plan at this point to capture growth in what is an increasingly complex reality.
So I think the times we're in really give us a chance to reflect on our businesses, to start thinking a lot more strategically. We can have a wait and see attitude, looking forward to an economy that's recovering, a global economy that's in a different space. And I think now is a very opportune time to kind of make the changes you need to make in your business. And that's what I'm going to talk about a little bit today. Just, looking at the bright side and seeing the opportunities in what seems like a really bleak economic environment.
Before we get into your presentation, what needs to be emphasized is that you've continuously got to relook that plan. It's got to be an imperative. It's crazy to believe that just over a month ago, we were here chatting about economic indicators, and so much has changed since then, whether we're looking at global or local forces.
Yeah, so it's that thing of really being agile, being plugged in and just in terms of what is happening around you and being able to move around it. The globe is changing. The macroeconomic forecasts are changing all the time. We'll see just now how GDP was expected to be much stronger in 2022. And all of a sudden, we're talking a lot about recession, not just for South Africa, but very many other parts of the world as well. But within all of that, there's still a ray of hope, and hopefully that's what we get out there today.
But we've got to have a firm handle on how we're going to navigate around
Absolutely.
the shifts that come into play, how we navigate this new normal, as we call it. You've got further insights to share, as you've been alluding to. So let's get straight into what you're presenting today.
Thank you, Alicia. And so we'll just start with the macroeconomic outlook, the global outlook. 2022 was supposed to be the year of recovery. The World Bank was actually forecasting GDP growth of 4% for the world. That has been quickly revised down to 2.9%. And as we've already touched on, recession is something that's on everybody's lips. Stagflation is something that is on everybody's lips. And you can just see from the chart, it's not a once-off event. We are going to see low growth at least up to the year 2024. And South Africa is not immune to the changes we're seeing. The war between Ukraine and Russia, our own challenges with the political system, as well as the floods we've experienced recently, are really painting a bleak picture just in terms of where we're going. GDP growth in South Africa alone is expected to sit below that 2% well into 2025. So it's very difficult, I think, for us to think of a hopeful and a radiant economy when we're looking at these GDP figures that are telling us quite differently. And that's coming out just in terms of our business confidence index. The Bureau of Economic Research measures business confidence, and we're really looking for a mark that's around 50 index points or higher. And as you can see, just in Q2 of this year, we're sitting well below that 50-point mark, really speaking to a discouraged business sector. But if we dissect the GDP outlook just a little bit further, there are sectors that are really big and very dominating. There are regions that are really big and dominating. And it makes us really not see some of the pockets of growth and pockets of opportunity that exist. So here we're just looking at GDP by province with an outlook up to 2025. And as you can expect, Gauteng not doing very well, still well below those 2%. But look at what happens in the Northern Cape. So going from a GDP growth of about 0 this year, we're going to see a jump to 1.7% in the coming year. We see a clear upward trend in GDP just in terms of the Free State. So what's happening in these regions and in these smaller provinces that we're not actually hearing about just in terms of the media. We can again talk about the Limpopo province, which is also going to see a gradual increase going into next year and staying well within those 2% GDP growth rates that we're not seeing anywhere else in the country.
So it's not all doom and gloom. There's real opportunity that can be leveraged off.
No, definitely. And we'll see some of the reasons why that is. We can also then look at some of the economic sectors of the country. So some of our biggest ones, like the financial services sector, not as low as we'd expect, so 2.5% growth this year, but also somewhat of an upward trend expected over the next 3 years. Something like the construction sector, which has had quite a roller coaster over the past few years, is expected to almost be around 4% growth in this year and next year. So really something already happening in that space. We can talk about transport as well. That's also seeing a gradual increase. Under transport, we include the storage and the logistics sector. And we've seen how that has really benefited just in terms of what has happened around COVID-19 and people looking to get the convenience of being serviced from home through the logistics sector.
So this is what we're talking about when we start to talk about green shoots starting to emerge in the economy.
Absolutely. And if we're blind to these opportunities, we'll miss out on the chance to actually take advantage of them as business owners. And hopefully let's not miss that chance while we're here. So we're going to talk a little bit about, how we can make the best of these times. It might not be the best time for the industry that you're in to actually maybe be growing like we've seen in some of the other sectors, but that doesn't mean we just sit back and let the times roll with us. And what we've seen is that mergers and acquisitions have really increased over the past few years. This lockdown phase going into this war period has actually created some opportunities for businesses, while others have lost value. This has actually created an opportunity for those with capital and money to spend to start looking at ways to buy up or expand where they're looking to do so.
Yeah.
So we're going to just look at the trends around mergers and acquisitions in South Africa. And in 2021 alone, we saw 473 merger and acquisition deals. If you look at just 2019, it's almost a direct comparison just in terms of the number of deals. But Alicia, look at the value of the deals, which is the dark blue line that we see there. We've gone from around 400 billion in 2019 to a staggering 927 billion rand in deals. And this is a trend we're expecting to continue in the year 2022. And of course, there should be more opportunities that arise from there going forward.
Why that extreme jump in value?
You know, that this time during lockdowns allowed us to rethink, reconfigure, and see how the world is changing. And a lot of businesses are then taking this opportunity to make the changes that they need. Let's look at a few examples that highlight some of that. So we've seen mergers and acquisitions related to market sizing or increasing your own size. I've included Boxer Superstores here, which is a subsidiary of the Pick n Pay business. Not a very well-known brand in some of the urban areas, but they've expanded so much in some of our smaller towns across the country. This year alone, Boxer has purchased 4 businesses, so 4 acquisitions, not very well-known retailers across the country, but you're just seeing how they're taking this time to really expand their footprint and get the brand out there. Mm-hmm. Another really cool example is Yoko. So nice fintech business that is doing really great things, supporting the SME space quite significantly and providing a solution around non-cash sales for businesses. So Yoko's acquired a business called Nona Digital. This is a fintech organization. And what's quite interesting about this acquisition is that they were saying, we're not acquiring this business for its clients or what it's been able to do. We're really interested in the human capital of this business.
Wow.
The guy actually says, we're literally buying them for their talent and not their clients. So really quite a strategic move in terms of acquiring skills at a very opportune time.
It brings a new definition to the war for talent, right?
No, definitely. So we can then look at some other reasons around mergers at this time. And this is actually a global organization, which is ADA. Mm-hmm. They're already quite well diversified across the globe, as you can see on the map. But they're also quite diversified just in terms of the industries they operate in, going from offices, metal production, glass production. And they've made this acquisition of Console, a local South African business. So really, we've seen Console attracting this capital, but diversification is quite important in times like this when you're not sure what industries are going to survive the changing times that we're in. And even smaller organizations can take on the same mentality around just shifting how they work and operate.
Yeah.
Then we move to a last example around the mergers and acquisitions, and we're talking here about the Foschini Group. Very much a brick and mortar store. Every mall in South Africa has probably some kind of a Foschini Group store. But lockdown, I think, raised the flag for the organization.
Needed to get its act together fast.
Definitely. The likes of Takealot and realizing that online retail is something real and something that they need to confront. And so they've gone off to acquire Quench, which is already existing in the online retail space. They offer the logistical services of making sure that deliveries reach people. And this is, nice strategic way of gradually entering a space that you might not be completely comfortable in, and just really allowing Foschini Group to position itself in a vastly changing world.
Yeah. For these transactions to happen, though, there needs to be a level of confidence in play. Are you seeing stark difference between local investor sentiment and confidence levels versus foreign?
So if you just look at what we've seen today, only one of these examples is a global organization. So it's really about having a future view and having a clear strategy for the business, one that's agile enough for you to move with the changing times. Yeah, these organizations have been able to see an opportunity at a time when many have chosen to go for voluntary liquidation or even worse.
Yeah, I asked the question because we're constantly looking at capital flow into the South African economy, right?
Yeah, and speaking of capital flow, Alicia, foreign direct investment, there is nothing more that talks of the confidence that we have in the country and the market than what we do with foreign direct investment. And South Africa has continued to attract capital from all over the world, and we're going to look at a few examples on this. This is just a matrix of global investment activity. I mean, the world is in turmoil. Everywhere there is a challenge. But despite that, global companies are investing all over the world. Answering to some of the burning needs across the world, we've got more than 25% of investment going to renewable energy. Another one related to energy is the coal, oil, and gas production. But if you just look at this matrix in its totality, you'll see that a lot of these industries are traditional, been there very long, nothing new. It's companies that know that we're going to get beyond these weak economic times and eventually get to a recovered economy and a growing economy. So we see the examples like electronic components, transport, real estate, metals, sounds like basically the economic structure of South Africa. And this is what world businesses are investing in. Locally, we've continued to see global investment, and nothing speaks of the success and interest in South Africa like the President's investment summits. To date, we've seen 96 billion rand flowing to South Africa in investment commitments. And it's really interesting where this capital flows to. So if we looked at just the industries that people are interested in, mining has attracted 22 billion. This is a sector we talk about the death of mining and how there's been so many challenges in the mining sector, but it's actually one that continues to attract investment. Manufacturing and the services sectors are also top three. And we're not even speaking here of fourth industrial revolution yet. It just reminds us that existing businesses have so much potential going forward. If we look at the regional differences, Gauteng remains one of the main provinces where we are attracting capital, but it's really interesting some of our smaller economic provinces like the Northwest and the Eastern Cape being top three as well, just in terms of attracting foreign direct investment.
At this point, I feel like we have to address the elephant in the room here. To what extent is the political economy, that political sphere, muddying the waters for all of this and this potential that we clearly have? So
I think beyond just looking at the politics of the country, it's important to see if the economy is working. And clearly, we see just from foreign investment that the country is operational. There's no economy that does not have its own challenges. But the mere fact that we're moving into a space where we find solutions and find reasons for investors to invest in South Africa is showing potential and a plan for a state to improve and pave a way forward towards recovery.
Yeah.
So let's look at a few examples of foreign investors doing interesting things all over South Africa. So what you see there in the picture is the beginning of the establishment of a solar energy plant. So Scartech is renewable energy producer all over the world. And this is actually going to be the biggest investment they've ever made in one country in one project. 16 billion rand will go into this investment. And it sits in one of our most quietest provinces of the country in the Northern Cape. what I love about this project is that it's answering some of our burning questions around the energy crisis. And, we've got this solar energy, we've got the sun that is there with us all the time. And finally, we're getting that harnessed and put into the grid.
So this is a clear example that speaks loudly to how you take that challenge, clearly the energy crisis that we're experiencing, and convert it into
an opportunity. Absolutely. Another quite interesting example, Huawei. So instead of investing in further production of its own goods or distribution of its own goods, they've taken a really interesting angle in South Africa. They're investing 100 million rand in 1,000 startups in South Africa. So if you're in the fintech space or in the technology space, Huawei is looking to invest in you. And really what I love about this is that, again, we're getting into the space of creating an technological integration in South Africa. Hopefully through these investments, we gain a lot from the expertise and the advances that China has made just in terms of the tech space, and allows us to move in this direction as a country as well. Another example, this one is in the pharmaceuticals industry. We've talked a lot about vaccines over the past 3 years. COVID really pushing us to find solutions towards the pandemic. But one that's been with us for a very long time is HIV and AIDS. And what Moderna is doing with partners, they've started trialing a HIV vaccine in South Africa. So imagine if these trials are successful, we'd have a solution to something that's been an ongoing challenge for South Africans for a very long time. Very excited to see how this project pans out and where Moderna finishes with this work.
Hopefully it's mired in a lot less controversy than the COVID-19 vaccines currently are.
I mean, these are the vaccines I think most South Africans are looking forward to. And we can go through a whole bunch of other examples. Netflix is investing 900 million in production, stimulating the entertainment sector, and then Amazon taking on the likes of Takealot. So you really see confidence just from global investors in the South African market and in the South African consumer, which a lot of us might not be very awake to. So Alicia, the last thing we want to talk about today is just in terms of government initiatives. Where are we seeing efforts to actually support growth from a fiscal perspective? Mm-hmm. And what I really like about the special economic zones, it's not about rescuing or, just providing the solution. Special economic zones are creating environments for businesses to flourish. What happens here is that there's a demarcated area with special rules and laws, tax advantages for businesses to encourage them to actually invest in South Africa, to drive the industrialization agenda, and really create export-led growth.
Yeah.
We already have a few special economic zones in South Africa. There's 11 in total. Just to touch on one is the Atlanta Special Economic Zone in the Western Cape, which is really focused on green industries. But we know that there's many that are fostering manufacturing, production, construction, and really stimulating employment opportunities all over South Africa.
Yeah.
We also have about 6 new special economic zones which are in the pipeline. We're going to talk a little bit about Namakwa in a little bit, but very interested and excited to see the science and high-tech special economic zone, which will be established in Pretoria in the Gauteng region as we move quickly into fourth industrial revolution. Why focus on special economic zones, and have they been successful so far that
That's
we
the
should,
big question, right?
go into another phase of having 6 additional ones to the existing 11? The numbers don't lie. So we've got 145 companies already committed, 83 more commitments expected in the future. So companies are already growing in these spaces and taking advantages of what is there. 20 billion rands worth of investment in special economic zones. So you have to be constructing something. There has to be a factory involved. There has to be production involved. People are very active in these spaces. And there's almost 40 billion rand that is already committed towards projects in special economic zones. And the beauty of it all is that it generates employment creation. It solves an existing problem in South Africa where we've had so much growth that has no employment attached to it. This is one opportunity in which we get investment that now re-stimulates this ability for companies to create jobs in South Africa. A few examples just in terms of where investment is happening and what's happening. Ford has invested almost 16 billion rands towards vehicle production in South Africa for local use and for export. But it shows a lot of confidence just in the South African consumer under the right conditions for companies to be able to flourish in the South African environment. So without the red tapes of some of the regulations that make it difficult for businesses, these are the things that can happen. Ford is very committed to Pretoria and this Silverton Automotive Special Economic Zone. We can talk a little bit about Toyota as well, more in the Durban region. Few challenges there over the floods, but they're still committed to growth in the region and making progress in that space. Namakwa, I love, and again, it just touches on what is happening in the Northern Cape, a region which is just seen as a desert, not much focus on it over the past couple of years. And really, we're starting to see this growth of business and industry and initiative in a place that's been really quiet and not much happening. We're going to see mineral beneficiation.
And that exactly jumped out at me when you popped up this slide, beneficiation, because that's been the drum that we've been beating for the longest while.
Absolutely. So we've got so much investment going into the mining sector now, as we've seen in the foreign direct investment numbers. But then to just export raw materials, let's be part of the additional process of creating value through those minerals that we mine. Construction activity we're expecting from the region. We can go through the whole list, but definitely green energy production is something we really need, and hopefully it comes on the grid as quickly as possible, just in terms of solving our energy solutions. So a real beautiful example of making something out of absolutely nothing.
It really is a fabulous story that we're looking at here. But I've got to take you back into that political arena just for a minute, because we're heading into the 2024 elections. So when it comes to those political manifestos that are going to be published, that we're going to be seeing flung at us left, right, and center, what would need to be seen within those manifestos to increase business confidence, because it creates an enabling business environment?
I think the SEZs are a real example of that. We need to see political parties being committed to creating an enabling environment for businesses. Don't make it difficult. Reduce the red tape. Create incentives that allow us to invest and invest more easily. I think what's also important is really taking care of the security challenges that we are seeing in the country. If we're not able to deal with that, even us as South Africans will lose confidence in our own country.
Thanks so much, Sandile, for joining us today and for helping us kickstart this conversation, for helping us set the scene as well. It's been a pleasure catching up with you once again. Well, as much as opportunity will present itself in slow to no growth economies, and there are mechanisms businesses can employ to remain resilient, we all hope that the next shifts we see in the political arena are steps more so in the right direction, and that really creating a more open for business environment that will see much more needed private sector investment flow into the economy, supporting overall economic growth. Welcome back as we open the conversation up now to some client-facing engagement to see how some of the theory is actually playing itself out in practice. So to get a better sense of the real-world experience in the new normal, Lebo Ramakwela, who's CEO of Libra Landscape and Facilities Management, joins me now. Thanks so much, Lebo, for your time today. Let's jump straight into things here and give us a bit of a sense of what Libra Landscaping and Facilities Management is all about.
Good morning. Libra, it's about landscaping. This is our core business, and rehabilitation, where we fix disturbed land, especially in mines, And we've got the third leg, which is agriculture. The aim of our business is to beautify, conserve, and protect the environment.
Let's take things a step back, though, to when COVID and lockdown hit. How hard was your business impacted, Lebo?
We experienced a reduction in scope. We had to lay off employees, and we closed the year with a reduced turnover of less than 56%. It was not easy, but luckily we had some essential service within the company, and it kept our doors open. So that helped a lot. And what it did, it ignited the thinking of management that we have to think broader and start diversifying. And from that note, I managed to pick up some services and products that will always be needed. So, and that's how to sustain the company.
I know that, Lebo, you're a small business, but a lot of businesses, whether they're big or small, can identify with what you've been through. You talk about how you've had to see a shift in your workforce come into play. Let's talk about who you retained. Was there a reliance more so on experienced team management to navigate through the challenges? Because that's the assumption, right? You keep the experts in.
We had to now to keep 50% of all our key roles. And that affected them mentally. It affected those who remained because they were not aware or not sure whether they're going to follow as well. Because of the reduction of scope, income reduced, and there was no way that we would keep them and letting hope run the business. And what we realized was that the quick shift of moving things like laying off people and changing our procedures, it made us to keep our doors open to them.
As the business stands right now and as you reposition Lebo for growth moving forward, to what extent has this changed workforce environment and landscape made things a little bit tricky for you on this growth journey?
Landscaping or horticulture, it's a human involved industry. Unfortunately, without employees, there's no way that we can serve our customers. So we had to reduce the cycles. We usually would maintain the gardens on a weekly basis. Now it has to reduce the frequency into twice a month instead of 4 times a month, and so that we are not exposing our employees to the COVID-19 virus, and also for customer to be comfortable that there's not a lot of employees on site. But the lack of waste removal, which is critical, it's one of the key elements that kept us running during COVID. So our business continued.
You talk about this shifted approach in terms of how you're managing your workforce now. How are you valuing human capital? Are you valuing human capital within your business any differently?
Oh, Libra, it's like a training hub. It's like a skills hub. Before COVID, during COVID, after COVID, we encourage PDP, that is personal development programs. We encourage our senior management to attend not just certificates, proper qualifications. All our project managers, they've done the project management. To add that, we even encourage employees to go and stand on their own and start their new companies. So we develop, and we don't see training as a cost in the company.
Yeah, absolutely. And every business should be viewing training in, in the way that you are, because skills development is imperative, specifically in an economy like South Africa, beyond the upskilling and the training initiatives that you've got underway, Lebo. Have you considered changes to your rewards or benefits schemes and those models in order for your teams to come to the fore with a greater competitive advantage?
Before COVID, we had a scheme that we introduced where we gave the employees a value where a supervisor must nominate their subordinate and motivate, and up on top of their normal salary, that value, that amount is shared within teams.
And Lebo, has it proven to be enough for you to retain your staff quite strongly? Because, we're always talking about the war for talent out there, specifically where you're training and upskilling your employees all the time.
It's not a battle. It's our daily routine to train. In this year already, from March to date, we've already spent 300,000 on training.
Lebo, thanks so much for having joined us this morning. It's been a pleasure chatting to you, and we wish Lebo, of course, the best of luck as she grows forward. Lebo Ramakwela is CEO of Libra Landscape and Facilities Management. Let's take the focus now to a bit of a bigger operation. Food Lovers Market. Andrew Milson, who's Managing Executive of Human Capital and Sustainability at Food Lovers Market, joining me now. Andrew, thanks so much for your time and thanks for being with us today. Well, Food Lovers Market has really exploded on the market scene, hasn't it? How much of the growth that you've seen planned for and anticipated?
I think planned for, very much so. And thank you, firstly, for having me on here, and wonderful to be able to share some of our experience. The planning, people say it takes, 20 years to become an overnight success. And Food Lovers started in 1994. And to be a part of that journey and to see how it has grown and evolved from that fruit and veg city to the Food Lovers Market brand that we know now, has been incredible. Absolutely amazing to see. And then, of course, the other brands. We've got Fruit and Veg City International, which is an import-export company. We've got Seattle Coffee Company within the group, which is just an incredible brand and doing some amazing work. And then our Fresh Stop convenience stores, which have also exploded across the country. I think there's about 350 of them we've opened across the country. So it's been a very exciting business to be a part of.
But hard to ignore what hit in 2020, right, with COVID and lockdown. So how hard was Food Lovers Market hit and impacted?
It was a very different kind of set of things that were happening in our business, because our core business in terms of the Food Lovers Markets became exceptionally busy. So we have never been so busy before. I think it was as a result of a few different things. I think it's where our stores were placed, often standalone stores. I believe that there was a real push towards healthier eating. So that kind of fruit and veg offering and the fresh offering was very much in demand. And then, of course, with restaurants and everything else being closed, I think that people needed to go to, kind of supermarkets to get their food. So in that respect, we saw huge growth and huge sales. On the other side, though, some of our other brands, the Fresh Stop stores, the convenience at the petrol stations, and obviously the Seattle Coffee Companies and some of our eateries, they obviously struggled because they had to shut through it. So a real mixed bag. But overall, as the group with the Food Lovers Market stores, the growth was exceptional. But that in itself created its own set of challenges for sure.
Absolutely. Before we get into the challenges, though, Andrew, how did this translate then to you managing your workforce? Because, we've come to talk about a shrinkage of the workforce over this period. Did it mean that you actually saw growth then?
Absolutely. And what was quite amazing is, again, being part of the business, I think sometimes it takes these kind of real disruptors, if you like, to see the true culture of the business come out and to shine. And what we saw there is we actually went out to market and we went to businesses that were struggling and we knew were either retrenching or temporarily laying off people. And we went out to them and we took some of their colleagues into our business to see how they could support us and in turn support them. So that was one amazing aspect that came from it, was like a collaboration across industry or across businesses, if you like, to say, look, you guys are, before you lay off, let us take some of your people because we are so busy that we need it. And then obviously within our group, we did the same thing. So we've got market liquors and diamond discount liquors within our business. And when they were closed, we took all of their people and we put them into Food Lovers Market stores. So it just took a little bit of rethinking about the possibilities that exist in terms of managing that sales growth that we had.
Chatting to you this morning, Andrew, you get a sense that, you're looking at things, of course, with the glass half full approach here and mindset. But you did allude to the fact that you did experience challenges. So what were some of those?
People were nervous, people were uncertain, people were scared. So when the whole country went into lockdown and went into shutdown effectively, we were one of those businesses that obviously stayed open. And our people, though, weren't immune from the fact from the very real fear that was out there, that they were putting themselves at risk. And that they were serving our customers every single day. They were with each other every day. And of course, you put in all the measures that we did, the social distancing and the washing their hands and everything else that everybody is so familiar with now. But we were very aware that when they were going back into their communities, people were nervous of them. So we went on a huge drive to actually reassure our people. And one of the best things that I feel came out was the leadership within the business. So, I remember we used to have these COVID meetings almost every single day. And when the very first case of COVID came through, our CEO, Brian, actually stood up and walked out and went straight to that store to go and speak to the people and to reassure the people. And that set the tone for the next really 2 years, where the entire leadership team, we were very rarely in the office. We were out in the stores, speaking to people, small groups of people, reassuring them, getting their ideas, where were their struggles, what would they like to see us do differently, and then bringing that back centrally and working it through from there.
Andrew, would you say then that you're valuing human capital a whole lot differently now post-COVID than you did pre-COVID?
I think we've always valued human capital. I think the business is very aware that at the end of the day, we might sell fruit and veg, but we're a people business, and it's always been the case. We have people who buy from farmers, who stock shelves, and people who serve our customers. So I don't think that has changed that much. I think the big factor there is maybe the positioning of the human capital department within the business has shifted slightly, because we became, I'd say, even more critical than ever before in the leadership side, in the reassuring side, and in the supporting our people side.
Yeah, you're a customer-facing business, right? So how easy or difficult has it been getting to a point where you can, in fact, opt for or shift towards a hybrid format model? Is that something you could potentially, given what you do, consider more so within your business?
No, that's been an interesting debate, that one. And when we serve customers the way we do, there's 16,000 people in the group, and the vast majority of them are on the shop floor every single day serving our customers. And so the hybrid model in terms of the retail space doesn't really translate that well. And when you start to look at head offices, it's such a small percentage of our total workforce. So overall, as a business, the hybrid model isn't something really that has happened or has needed, because we haven't really had the people working from home. They've been in the stores busier than ever serving our customers.
Absolutely. So that an incentive that you can't necessarily, given what you do as a business, put on the table for your employees. Have you reconsidered your approach at all when it comes to attracting, managing, and retaining top talent within your business as this business grows?
Yeah, I think that's been a focus for a while. I think that certainly the growing talent. We've got a whole program that we call Same Faces, Higher Places within Food Lovers Market Group, and the whole ethos behind that is, and I've said this many times. How do we? I come from a very privileged background, and not everybody had the same access to education, for example, that I did. So, but when I look around at the 16,000 people, there are people that are absolutely more talented and have got more potential than I've ever had. Yet they didn't have the same access to education that I had. So that's been the ethos that's underpinned our Same Faces, Higher Places. In terms of that talent management, then is our view has been, how do we encourage and support our managers to identify and nurture and then develop the talent that maybe doesn't look like me or sound like me, or look like them or sound like them? And how do we really give people an opportunity to flourish and to grow within the business? So that's been a big part of our ethos and our sustainability strategy and our people strategy for the last number of years, actually, that started pre-COVID. And certainly won't be going anywhere.
Andrew, as you do that, and as you put the workforce on really enhancing your employees as they grow with the business, are you getting caught up at all in the war for talent, particularly where you've got skills that are in short supply and high demand? And if so, how are you now navigating that challenge?
Absolutely. I think finding amazing people is always going to be a challenge, especially in the retail space, because the retail space isn't the most glamorous space. There's very few people who wake up one morning and say, yeah, when I grow up, I'm going to sell, cabbages and carrots. It doesn't happen that often. But once you're in it, and it's long hours and it's hard work. So again, what we found is that the people, once you get into retail, it can be I think it's kind of addictive for a lot of the people who work on the shop floor. So how do we give the most opportunity to the people who've been with us and have helped to grow this business? And where's the reciprocity in that? How do we in turn help to grow them?
As far as rewards go and incentives go, Andrew, what kind of rewards, benefits, models are you putting on the table for your employees right now, as a possible competitive advantage when it comes to battling out in that war for talent?
There's a number of different employee engagement and kind of benefits that we've looked at. I think right now, where the biggest challenge within the not necessarily the market, but within the social structures with which we operate, is around the cost of living. And I think there's a lot of work going into that at the moment to see how do we support our people to actually grow within the business, to have a standard of living and a way of life that every single person deserves. So I think that's where a lot of the work at the moment is, less around kind of attracting top talent from elsewhere, but actually how do we support our own people to grow and develop so that they can live the life and realize their own full potential.
I'm going to ask you a very pointed question at this point, Andrew. Are you valuing human capital as an asset like any other asset on your balance sheet right now? Or is that still an evolution that's happening?
How do I say this? Relegating people to a balance sheet is not right. So I think that people are worth a lot more. I think to do that just kind of corporatizes business way too much and dehumanizes business way too much. And at the end of the day, I think we really shouldn't be dehumanizing what we do. We are a human business, and it's filled with people with hopes and aspirations and challenges. And living in our country at this particular time, there are possibly more challenges than ever before, or that people, that globally, I should say, that elsewhere. So really the focus there is, how do we give people a voice? How do we actually get everybody to treat each other genuinely with respect, to see people for who they are, for look across the cultural barriers and actually celebrate our diversity, because if we are able to do that, if we are able to genuinely look each other in the eyes and celebrate our diversity and actually start to learn to lead less from the head and more from the heart, I think that we can change our business, and then hopefully, if we can have a ripple effect from that.
Yeah. So with that kind of mindset in play and some of the initiatives that you've outlined coming into play as well, how do you see all of this at the end of the day, Andrew, translating to future growth, productivity, and profit for Food Lovers Market?
I think if we take a real people-centric approach to business, then it ultimately will be the people that drive the growth of the business. So, if you look at where we've been over the last few years, and if we go back to COVID, the way that people came together within the business to serve our customers in very, very trying circumstances was awe-inspiring. It really was amazing. And I think the businesses was quite taken aback by that real go get it attitude from that came to the fore. I guess it's always been there, but in this time it really came to the fore. So I think by really continuing with that people-centric approach to business and putting people first as much as possible, the profit will come, the growth will come, and it will come through the people. I think if you focus purely on profit and leave people behind, that's quite a short-sighted approach. So if we can keep focusing, putting people first, helping to our people so that they can in turn support our customers and we can grow our customer base, that's where the growth is going to come from. That's where the customer is going to come from. But it's going to come from a focus on our people.
Andrew, let's leave it there. Thanks so much for having shared some of your experience with us today. It really has been great chatting to you. And of course, that with on-the-ground experience in the new normal, it really provides valuable lessons for other businesses out there, right? As we all try and navigate this new operating environment as best we can. Andrew Milton is Managing Executive of Human Capital and Sustainability at Food Lovers Market. Of course, one of the new normals we've become accustomed to are hybrid events. So once again, a very big thank you for joining us virtually today, while our guests join us both in studio and online. This Leading Edge Insight series is brought to you by Liberty Corporate. Up next, I'm pleased to welcome Liberty Corporate's own Bram Nadir and Thembi Mavuso. Welcome to you both. Thanks so much for joining us today. So there's no denying that turbulent times are very much still with us. But as we heard in Zandile's update when it comes to leveraging opportunity, nevertheless, as we heard when we chatted to Andrew about his approach at Food Lovers Market and then Lebo's positivity as well, there are ways to leverage off opportunity even in challenging times. Bram, do you agree?
I think absolutely, Alicia. I think it has been an incredibly difficult time, as we're all aware, but it is really around all of us. And we've seen it with our customer base. I mean, you referred to Andrew and Lebo, but frankly, even Liberty itself, as an employer and as a provider, thinking, how do we navigate this and how do we actually make the most of it?
Yeah.
So an absolute necessity in this changing world.
How do we make the most of it? So let's get into some of the granular details here, Thembi, because we need to know, for our viewers joining us online, engaged with us in this conversation today, what do they need to know to make an impact in their businesses from today?
So I would take something about what Zandi said. You can see collaboration is a big key, a big theme, that if you can find within your organization teams that can collaborate, or even similar businesses to yourself, to see how you can leverage off each other. But then also important is to be agile, because as we've seen during and post the pandemic, that's just how you can be able to identify those opportunities in the chaos, to be agile.
It's a difficult one to navigate and get round, though, because that line is very blurred, right? What's competition and what's collaboration?
It is, and I think what a lot of companies have learned, I mean, and it's not only during the pandemic, I think it preceded that, but you can actually sometimes cooperate with your competition. There are sometimes areas where, competitors can collaborate, but obviously, there are other areas where I think one's got to be very careful for all companies. What is your your sort of true value proposition and look at that very, very carefully and sort of compete on that angle.
Yeah. When it comes to that, Bram, what's Liberty Corporate's position or approach to solutions it's putting on the table for its clients right now?
I think, Alicia, we've given a lot of thinking to what really is our core proposition. And I think we really ended up on one simple philosophy, and that is we absolutely have to walk the walk with our clients. We have to be there for our employers, because and I think it came out very clearly in Lebo and Andrew's comments, the most valuable asset for most, if not all businesses, is their human capital. And, we like to believe we play a critical role in that, and helping employers, give a better employee value proposition to their employees. And we want to be, and we believe we are, a critical partner to employers in that endeavor.
But with all I've been reading up to today, it seems like regulatory changes are going to be a significant, challenge or obstacle to kind of overcome and navigate here. What's on everybody's lips regarding the regulatory changes that are to come?
Yeah, I think that's been, probably across the world, but certainly in South Africa, we know sort of regulation has been a massive issue, and it's not a recent thing. It's been coming the last 10 years. We've seen big things like T-Day, et cetera, that have made some big changes in South Africa, certainly around retirement savings. The reality is retirement savings, it remains a massive challenge in South Africa. We do know that. There's a savings crisis. I think the really big thing that's really come about the last probably 6 months, but to be honest, it's becoming a little bit longer, is the whole issue around preservation. And, we know this is the one thing that we've really struggled to get right in South Africa. It's a big contributor to the savings crisis. And it's the fact that people generally don't preserve for retirement when they move during their employment or during their careers. So they effectively withdraw money. So we saw towards the end of last year some of the first sort of draft papers being published, and there's been some recent draft legislation, what's called the two-bucket system. Now, interesting name, but really what it boils down to is it's the mechanism that government proposes to really deal with basically two things simultaneously. And it is to bring about, improved retirement outcomes, and it's really through improved preservation in South Africa, but simultaneously walking that tightrope between also giving members and employees ultimately some level of access to those funds when they do have typically life emergencies or crises during their working lifetime. So it's really trying to get that balance right. And it's obviously an incredibly difficult thing to get right, but I do think, I don't know about Tembi, but the way they've gone about it seems to be a very evenly balanced and well-considered approach generally.
What's your assessment of what they've put on the table here? Because it is quite a tricky balancing act that you've got to get right in order for this to work and be effective, not for the short term, but for the long term as well.
Correct. So I do agree with Bram in that it is evenly balanced, because I suppose National Treasury is responding to the calls, because during the pandemic, people lost their jobs, people had reduced salaries and just needed extra income or to be able to access some form of income to tide them through. And currently, and during that time, our laws just didn't allow for it. And we saw different pension systems around the world, like in the USA and in Australia, where they allowed their members to access a portion of their retirement savings. So it's in response to that. But as Bram also alluded to, being able to access your retirement saving has to go hand in hand with preservation. Yeah. So with the two-part system, you will have the first part, which is what they now in the draft legislation are referring to as your savings part. And that's there where you can be able to draw some money. They are proposing once every 12 months. And then there will be another part, which is the retirement part, and that is the preservation one. That we can't touch. So that is my backpack that I'm going to carry through until retirement.
Let's refine this a little bit, Tembi. What are some of the key considerations to be kept in mind here as we see this evolution progress?
So some of the key considerations is to, at the back of our minds, that retirement savings is really for that, to provide us with an income in retirement. But we cannot be oblivious or blind to the fact that people do struggle So when you're going to tell me to contribute to a retirement fund, but I don't have enough money to come to work, so we need to also just be cognizant of things like that. So the two-part system sort of kind of does deal with that there is a portion that I cannot access until I'm in retirement, so that is I'm going to use to give me an income in retirement. But there is this other savings portion. I don't have to access it if I don't have to, but to know that I can.
There's a safety net of sorts. As TMB highlighted, we've got South Africa following on from global trend, Bram. So what are some of the lessons we should be extracting locally from those global experiences?
Well, I think certainly two-part, which really talks about preservation. And again, some of the things that preceded that, like T-Day, which brought about annuitization, a lot of what those are examples, but a lot of the other changes we've seen as well in South Africa is really very much schooled or based on some of the international trends, Alicia. So we do know governments and regulators now sort of talk with each other internationally to align on some of these trends. I mean, some of the big things that, again, looking at what's sort of been driving retirement, systems and changes internationally, and that we certainly still expect to see at some stage in South Africa, would be things like, we've now got, preservation coming in, but certainly I think the question that really still sits at the foremost of we do know National Treasury and others' minds are things around, do you make retirement savings compulsory for all working employees? There's a softer version of that, which is sort of called auto-enrollment, which is, people effectively defaulted to contribute, but they've got the option to switch out. Compulsion would be there's no option to switch out. And certainly seems some of the recent papers, we've seen that seems to be a key thing on our sort of legislators' minds, but we know it's ultimately modelled and based on, some of the international experience we've seen in other systems. When and how that may come to fruition, we don't know, but that certainly is one of the big trends I think we do know is occupying the minds of the legislators in South Africa.
I know we've underlined from a legislative perspective, a regulatory perspective, this two-bucket system that's coming into play and looks to be brought to the fore. Beyond that, when it comes to the structuring of these funds, what are some of the considerations being made on that level? Regulation 28, for example, whether you're ESG compliant or not, how's that starting to impact the way funds are being structured right now?
I think it's already obviously regulation 828 is not new per se, but what we have seen is big changes within regulation 28 being made, and certainly some of the underlying drivers to that. Again, it's some international trends, Alicia. So it's those three well-known letters ESG, but it's a big issue, and it's again driven by international trends, but getting more and more established in South Africa, and it really is driving not only the thinking, but the practicalities around how institutional investors, retirement funds and the industry obviously being one of the biggest investors in South Africa, how they invest their monies or their funds, and the considerations they have to apply in terms of considering various options. Some of the biggest ones would be infrastructure funding. We know in South Africa that is a very big issue.
Yeah,
yes.
Because it influences, like Bram says, the ambit of these investment funds at the end of the day.
Yes, and just to carry on from what Bram is saying about the infrastructure, so with Regulation 28, the latest change was to provide a definition for that and to increase allocation to that. And that really comes from even from the governing party in their policy discussions, saying that pension funds in South Africa sit with over R1 trillion in assets. And we have a problem in that infrastructure needs to be rolled out and government doesn't really have the funding to do that. So now we have this opportunity to be able to use the pension funds assets to solve some of the country's problems. And in doing so, I think that speaks to the S of the ESG, the social component, because I'm not only a pension fund member, but I'm a citizen of South Africa. And investment in infrastructure also benefits me, benefits my family. But obviously, in terms of structuring those investments, has to be done prudently, has to be done in a way that as pension fund asset owners, we feel that members are going to get a return on the investment and that the investment is safe.
Yeah, because up to this point, Thembi, we've been talking about the one side of the equation. On the other side of the equation, and I'm going to reflect back because we've heard from our employer guests earlier, what trends are you starting to see in the workspace from employers when it comes to, the way they address some of the changes that we are seeing on a daily basis?
So in terms of the employers, it's just more engagement with the members. So communicating to remind them that this is your retirement fund, these is the benefits that it offers you, and this is what you can do with it. So, for example, during the pandemic, those employers that did have like your income disability products, for example, members were able to claim for that when they had long COVID. So you don't have to worry about, I'm sick, am I still going to have my job when I come back because I'm recovering from long COVID? You could claim from a product like that, for an example.
Bram, have we seen companies change their views on employee benefits and rewards and how they're approaching?
I think we absolutely have. And again, listening to Andrew and Lebo and just some of the examples that they gave in their companies, we've certainly seen that across our customer base. And I think some core themes come out. Obviously, I think how they play out in specific industries may be slightly different depending on the nuances of the industry. But I think some of the themes are, the need to really engage with, and I think you mentioned that, to really engage with employees. Employees really want to be spoken with, not spoken at or spoken to. The soft stuff really matter. The aspect of employee well-being. And really just how do employers look holistically after their employees? That is just so critical. Now, the challenge is those things are often difficult for employers to get right. But again, there is help available, in the industry. There are, often packaged services or providers that help them with some of these things around, from counselling or the likes. We provide it on some of our products, but they're quite commonly available. And we've just seen the need for those sorts of things have just increased quite significantly.
Thembi, I was going to ask you, are you seeing enough of that engagement and interaction happening between employer and employee where the employer does embrace a soft touch approach?
Yes, it is picking up, especially when employees as members are saying to the employer, listen, this is what I need. Can you help me? How can you help me?
Yeah.
And with the return to work, we're seeing a lot of employers are, although not keeping fully to work from home, but adopting the hybrid model so that, meeting staff halfway that, yes, you've been working at home for the past 2 years, you don't have to come back to the office, but, it is beneficial for team building and just collaboration and just to be with your colleagues.
Absolutely, the social element of it all, right, Bram? Do you see, Bram, that employers are cognizant enough and, taking this, listening to feedback, and we can say listen to feedback, but then there's really listening to feedback and engaging with product properly so that the outcomes are essentially what the employee wants at the end of the day?
I think employers are. I think one's just got to be realistic as well. Alicia, I think we certainly saw many of our customers, during the pandemic. For some of them, it was really a matter of survival. So, our sort of mission was how do we work with our customers to help them, survive through the pandemic, while certainly still trying to meet some of these changing employee needs. But I think now that hopefully the worst of the pandemic is over, I do think we're going to see an acceleration of that, where companies now really, given the sort of probably permanently changed expectations of employees, we're going to see more companies now and having the bandwidth and perhaps the financial resources to more actively engage with that and say, what does the new normal look like? And how do we make it real for employees?
But also, Bram, how do we as a business extract value from this at the end of the day? What's the value proposition for me as a business? Because it's not just about the employee and what they extract from this, right?
Absolutely, and I think for a business, ultimately, going back to to the central theme of, your people, your human capital. I mean, that, for most businesses, that is the heart of your business. So, ensuring that you have got a business that's motivated, where you can equip them with the skills. And I think increasingly what we're certainly seeing then, or how it practically plays out, is often a need for more flexibility. Again, specific targeting of propositions for not just a group of employees, but for individual employees within a business. In other words, how do you make it more relevant for the individual employee as opposed to the collective? We do see that as going to be increasingly an issue, and that's certainly something we're applying our minds to, is how do we support and work with employers to make that real? Because if you can make that real and support the employer, and ultimately you've got a well sort of remunerated and a very satisfied employee, ultimately it's a win-win for everybody in the equation.
Absolutely. Every time I have these conversations with you guys, I'm constantly reminded of just how critical human capital is within any organization, how important it is to value that human capital correctly and to be completely up to speed with some of the trends that are in play as well. Thank you both for having joined us in conversation this morning. It's been a pleasure catching up with you. And of course, a quick thanks to each of my other guests today. We had Zandile, Lebu, Andrew joining in the conversation all before Bram and Tembi wrapped things up for us. So thanks to them for having shared valuable insights and perspectives with us today over such a brief period, might I add. And it really feels like we've covered so much today, with so many great ideas coming to the fore and solutions to consider in whatever business or operational area you might be. To our viewers today, a reminder, do post any questions you may have for our in-studio guests, and we'll revert with a reply as soon as we can after this webinar. And then watch out for the future Leading Edge Insight Series Symposium scheduled for October the 31st at the Sandton Convention Centre. We'll be unpacking topics like these and so much more through a full day of sessions exploring how human capital and employee benefits can be a significant driver of growth in your business, industry, or sector. On behalf of the team at Liberty Corporate, once again, thank you very much. We look forward to seeing you all again in person in Sandton late in October. Bye for now.